This is Teddy Kegstedt from Forex Trading Unlocked, and we are here for a weekly Forex market analysis for February 1st to the 5th, 2021. Before we get into it, I want to just show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. Also, please subscribe to our YouTube channel, Forex Trading Unlocked, and also pass it on to your friends in the Forex and trading environment. Also, check out a book, High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback and Kindle versions. During this video, we will be showing you all kinds of Japanese candlestick patterns that are shaping up in the marketplace. All right, so with that, let's start our video now. We are at the Forex-Trading-Unlocked.com website. We already have the workstation page pulled up, and whenever you come to our workstation page or any of our pages, you can always tweet them out just like this. You know, you hit that little thing and helps to spread the word about what we got going on here at Forex-Trading-Unlocked.com. All right, so we have the dollar index. The week ended a little bit higher. Dollar bulls are pressing higher move highs and higher move lows. We had a bullish engulfing line that sparked back at the beginning of January. As we head into February, we are looking to challenge resistance here at this 90.97 area. Should we breach this level, that would confirm higher move highs and have the dollar index looking for a pressuring move up to 91.73. I think 92.36 will cap any short-term bullish move to the upside. I don't expect this to happen in just a couple days. I think this is something that would probably take about 1 to 3 weeks to manifest. There are reasons that will support the dollar index, and we're going to go into it as we look at these different currency crosses. One of the things you want to look out for is the 30-year Treasury bonds. If they stay above $170, that'll probably make sure that the dollar index will not get any further than this upper range. Should you see the Treasury market start to collapse again and pressure lows, especially if they get below 168 towards $167, that would definitely fuel a surge into this target zone, and then you'll probably see the dollar index chop around this area. Remember, overall, long term, we are a bear, but in the short run, higher move highs and higher move lows confirms a short-term bullish trend. All right, Euro US dollar. This is the #1 biggest weight in the dollar index. As you can see, we had a bearish engulfing line sell signal that was triggered back in the beginning of January. We have made lower move lows and lower move highs, and now we are chopping around looking for a slide down towards this target area. We have a position where we shorted at $1.2268. and we adjusted our stop down to $1.22 even. We have these two downside targets for both of our trades. 119.75 being the initial one, downside target number 2 being oops, this is the wrong number here. We got to correct this. This is not a 188, it's a 118.89. There we go. That makes more sense. Okay, so this target zone here is where I think you will see this move get pressed into over the next couple of sessions. Especially if you see the dollar index climbing, that's probably because the euro is falling. Now the euro and the UK have a lot of things that have been settled in post-Brexit already, but there's a divergence going on. Oil is helping to keep the pound up. The EU has a lot of things that are weighing on its side in its economic and political divisions right now. Italy's collapsing, their government's collapsing, they're completely broke. Germany's going to have to bail out all these countries, and now without the aid of the UK, it puts a lot more stress on Germany, which is the engine of the euro. So we'll see how this pans out. I would expect to see the euro probably more likely than anything continue lower and make a test of this $1.1975 down to $1.1890 basically. Once it gets down there, that's kind of where the dollar index would be in that little upper band where I just pointed out to you. Should the should the euro US dollar stabilize in this area, that would be one of the things that could hold back the dollar index. But if you see all the other currencies falling apart as well and dollar strength running through across the currency crosses, then I would expect this trend to get pushed out even further. But first things first, right now in the short run, we're targeting $1.1975, new or move lows. Remember, it was kind of quiet to end the week. We'll see how it starts tonight in the Sunday's trade, but I believe that over the next couple of days, you'll probably see it go lower. British pound, US dollar, next on our list. This thing is buffering up against the highs. Key pivot levels. If we challenge $1.3758, it may just kind of breach it a little bit and fall apart and go sideways. It could also instigate another major move higher. However, the UK has its own woes. Like I said, oil is really the only thing I think holding up the pound because the UK, obviously British Petroleum being one of the biggest oil producers in the world. Now, we know that they are no longer going to be expanding or looking for any new drilling around the U.S., that's for sure, because the current president has eliminated any future permits of drilling. So that is going to come to a close, but that also supports the price of oil. So that's going to probably most likely keep the pound from falling down like the euro may, even though they have all their own economic woes. The thing is that the UK does not have to contribute to all these European Union countries anymore. So I think that's why you're seeing the pound show strength and divergence between the euro and the pound. Now let's go on to the US dollar CHF, meaning the Swiss. This had a bullish engulfing line buy signal at the beginning of the month of January. We have been buffering up against resistance. This key pivot level at 89.23, I think, is the level to watch. A breach of this level confirms new fresh buying and momentum that should pressure around this 89.78 area. This is another key pivot level. However, I'm pretty sure that if we make a higher move high now, that this upside target zone is going to probably come into play for sure. I mean, not for sure, but you know what I'm saying. It's most likely if the euro continues to break and the pound stays where it's at or goes lower, there's a good chance that the US dollar Swiss will also rebound up to this area. We are not, once again, if it comes up to here, that would kind of put the dollar index in that upside target zone as well. This is where you'll probably most likely see the bulls run out of gas and then a sideways trade develop, especially with the Swiss. If there's any market that most likely will not unwind, it will be most likely the US dollar Swiss. All right, US dollar JPY. Let's go to the other side of the world and see what's going on in the Asiatic trade zone. All right. We had a big breakout here in the Japanese yen. We had a piercing line buy signal that occurred at the beginning of January, sparking this low. We've made a higher move. We made a lower move high, followed by a higher move low, and we confirmed higher move highs in the last 2 trading days of last week, especially crossing this pivot here. This confirmed and closed above this line, not just blowing through the higher move highs, but really showing momentum. So this target zone that we have up here is starting to look more and more reachable, especially as the dollar bulls continue to press through these currency crosses. Notice this yellow line here. This yellow line here is a trend line. It's a downward sloping resistance line that comes in from all the way back when this market started falling apart in February of 2020. So we are in a 1-year bear market with the US dollar versus the yen. Have we bottomed? Short term, obviously we have. Will we continue to make a run for higher move highs? I think yes. I think in the short run, over the next 2, maybe upwards of 5 weeks, we'll gradually trade into this upside target zone and then most likely come off of this resistance line. This would also put the dollar index in that higher area like we started out the video. You could realistically see these major currency crosses as they fall apart versus the dollar. This is a corrective move, by the way. We're not bullish the dollar overall. We're just looking for the short-term correction to continue to press on. And by the way, if you hear a snowblower out there, it's because I'm broadcasting in Chicagoland and we've gotten a foot of snow in the past, 18 hours, something like that. Probably even a little bit less. All right, so let's look at the Australian dollar, US dollar. Now, price of oil has been helping Australia out for a little bit, but this market has been also rallying for the past year against the US dollar, and this one doesn't want to stop. At least that's the way it seemed to be reacting. But it had a dark cloud cover sell signal. That's another high probable Japanese candlestick pattern That sell signal was triggered also at the beginning of January. So when you see the dollar index, when it has a sell signal or a buy signal, it's very likely that in a lot of your major crosses, should that bottom or top be a good level, that you will see these also happen in these other currencies. Now, unlike the euro and the yen, the Australian dollar is not breaking that hard. However, it did start to tip into our downside target area here of a 76.41. We are now looking for a continuation of lower move lows towards 74.07, somewhere to bottom in this area. As you can see, the market made a high and made a higher move low, then a lower move high, and then consistently lower move lows and lower move highs moving into the last trading days of last week, settling just below here of our downside target number 1. This one, because of oil and it's a commodity-driven country, and because of the current inflation in commodities, especially ones that they produce, that's, I think, giving you a little bit of strength. So even though the bears are trying to hit this market, and they probably will continue to over the next week or two, to even upwards of 5 weeks, I would not expect a severe slide in the Australian US dollar. Even if the dollar pounds, no pun intended, the pound, the euro, and all these other currencies, and I mean really hits it, like starts blowing through our target levels, then you may see an increased correction with the Australian dollar. But if oil continues to rally and a bunch of other raw commodities continue to go up in price, it's going to see, I believe, a severe enough slide in Australian dollar, US dollar. Now let's look at the New Zealand dollar, US dollar. As you can see, the New Zealand dollar, US dollar also had a dark cloud cover sell signal at the beginning of January, and now it has made lower move lows and lower move highs. It's pretty neutral as well, just like the Australian dollar. You can see our downside target area here that is down around 69.14 to 68.22. It's probably going to take a little while to reach this area. Like the Australia, it has a lot of commodity-driven reasons to hold it up. So we'll see. This 72.45, I would say, is a key pivot level. Should the market get above here, it will be challenging the high that was set back in January, and then all bets are off the table. So just like Australia, I think you're going to see a divergence between Australian dollar and New Zealand dollar, meaning that they could actually rally while all the other currencies globally are falling apart versus the dollar, meaning because of the commodity rally that's going on in place in the things that they produce. All right, now let's look at the US dollar Canada. This is an interesting bottom that's occurred. We had a head and shoulders here in a violation back on Wednesday with a close that confirmed strength, because you had a head and shoulders violation. See this red line here? That confirmed the breakout to the upside. Also, as you can see, we have these pivots, real type 3 pivots here. The market pierced but did not settle above this previous high, but it's right there. The fact that it is a head and shoulders buy signal, that gives us a very good reason to believe that the US dollar Canada will continue to press forward all the way up to this target zone. When this head and shoulders formation came through, it also took out this downward sloping resistance, which was keeping the bearish trend intact. This market has been trading lower for a long time. Bulls here, but I think that especially since we have the head and shoulders formation and we've sustained a trade up around these key pivots here from basically $1.2790 to $1.2841, expect a lot of choppy trading in this area. A breach, though, however, of the previous high now, so that was newer move high that was set on Thursday, anything above there, we are definitely going to be bullish, looking for a rally into our target zone over here. All right, so pretty clear on that. Now, for all of you that were looking and thinking about, hey, get vaccines or whatever, however your point is on that, we're not going to go into that, but I know people are thinking about spring break, aren't they? I know the college kids are. So the U.S. dollar Mexican peso was getting beaten up harshly into January, had a nice bounce here. By the way, this is your risk level down here, and you know what we have here? Here's another reason why you got to read that book, High Probable Japanese Candlestick Patterns, because right here we have a bullish engulfing line right there. That's what started this rally here. Let me put this here. Bullish engulfing, whoops, line buy signal. All right. So that is the base for our rally now going on in the peso. The key thing was, see this last lower move high? We took that out last week, Tuesday it was, and then continued to press higher. Friday, this was key coming out of this 2026 to 2039 band here. Above here, this is not only short-term bullish, but that pierced through us all the way up into our upside target zone. Now we are going to widen that up a little bit. So I think that 2079 is probably going to be the cap for this trade, at least in the short run. Now, once again, should the dollar really be rallying against currencies, then you might see the peso back up around 22 pesos to the dollar. So the nice thing is, if you are planning on going down to Mexico anytime soon, your exchange rate is going to be pretty good. You'll get it above 20 pesos to the dollar, which that alone is better than paying 19, 17, 16, which is where it was a year ago, where it dipped. So it's good to see where it's at for those who are looking to go on vacation. So the key thing is, I think you really, really want to watch out for the euro US dollar once again, as we have these sell signals in place. We are pushing these levels are not far. If you look at the market settled at $1.2132, so you're looking at basically a little bit more than $1.50 break in the euro, and that would then once again probably push the dollar index where we started higher. So as you can see, this upside correction zone for all these markets where they're trading right now, whether they have to go up or down, meaning that they are, whatever way that is in the correlation with the dollar being bullish, US dollar bulls pushing up into this upside correction zone should continue to lay pressure on all those currencies and help the dollar index climb up to that level. So just remember always, once again, to watch our videos on YouTube. You can do that by subscribing to our YouTube channel, Forex Trading Unlocked. And also remember to read the book, High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback and Kindle versions. And with that, you can learn how signals to your own trading. And it works in the Forex market, stock market, option markets, you name it, it works in all of them. All you got to do is have a good trading plan and follow the rules. With that being said, I want to thank you very much for your time here. Forex Trading Unlocked, always check us out for your... We are here for a Euro US dollar Forex market analysis for February 1st through the 5th, 2021. Before we get into that, we want to just remind you that this webinar is for illustrative and educational purposes only. By using our disclaimer here, excuse me, then we have a little promotion here. Please like and follow us on YouTube. Forex Trading Unlocked is our channel. Pass it on to your friends in the trading community, and also check out the book, High Probable Japanese Candlestick Patterns, which is available on Amazon.com in paperback and Kindle versions. One of the reasons why is because you'll learn how to trade the signal we are about to look at right now. All right, so we have the forex-trading-unlock.com website pulled up, which you should go there for all your Forex trading information and needs. We have the workstation page also pulled up. We have a Euro US dollar chart. And as you can see, we had a bearish engulfing line sell signal that was triggered in the beginning of January. Since then, we had made a lower move low, a lower move high, and now we are chopping around for direction. We had a sell signal, this bearish engulfing line, obviously. We have our original risk level was up here to $23.53. Now we have our stop adjusted at $1.22 even. We have two trades on. One is targeting $19.75. The other one is targeting $18.89. This downside target range is probably the extreme of what I think you're going to see as far as a break in the euro. Let's take a look at the dollar index real quick and you'll see why. As you can see, the dollar index looks like an upside down version of the euro. Usually that's because the euro is the biggest component in the dollar index. Not that they're identical though. However, should this dollar index continue to be a bull, which we think it will be, and get above this 90-97 area, well then that would mean that the euro US dollar most likely would be heading down through this $20.50 level, and that would have us leaning on our $19.75 first target zone. That would be a good kind of like buffer zone, and I think it would probably chop around and still get down to $18.89, especially if you see an unwinding in the pound, the Swiss, and a bunch of the other major currency crosses versus the dollar. So once again, we have an overall short-term turn in the market confirmed with a bearish engulfing line sell signal. Remember, you can learn how to trade these signals on your own and apply it to your own systems by reading the book High Probable Japanese Candlestick Patterns, available on Amazon.com, and it's in Kindle and paperback versions. Also, if you watch our videos, if you're subscribed to our YouTube channel or you go to our YouTube channel, there's all kinds of lessons that we give that gives you information on how to add these signals to your trading plan. So once again, we are short from $1.2268, looking for that first target of $1.1975, and I believe over the next 2 to 3 weeks we have a good chance at least hitting the first target, maybe even this week, by the end of the week. As you can see, this downward sloping resistance is pretty steep, so we're going to come out by attrition today on Sunday night when the markets open up. It'll be interesting to see what goes on. Only if we get above, once again, like I said, $1.2196, would that confirm higher move highs after a higher move low, which right now it's consolidating because we made this lower move low, lower move high, and then we came down here and made a higher move low. So the question is, as long as we stay below $1.2196, we have a chance at taking out this $1.20 half, and then that would be definitely bearish and confirm our, theory right now that we're going to definitely come down and challenge this $1.1975 support band. We'll see what happens. We have a lot of things going on in the world now. Remember, there's a commodity inflation trade that's driving a lot of currencies and giving them strength. So you're finding strength in the Australian dollar, New Zealand dollar, the commodity countries. Also, oil has been helping the Canada and the pound also stay strong versus the dollar. So there's probably going to be a good divergence going on now. The dollar index is going to start to be hard to use as a gauge for any individual currency. You have to look at them on their own merits. And you got to remember also, Brexit's over now. The UK does not have to help fund all these countries in the EU. Right now, Italy is bankrupt and in complete shambles between their politics and their finances. Germany has to bail them out without the help of the UK now. So the stress on Germany and the UK is going to start to show in the whole UK as a whole, and we'll see how that pans out. And that's why I think that right now you can see this correction to the downside be pressured. Okay, so we don't really have anything else to say right now because the markets haven't opened yet. So we'll be updating what's going on with the Euro US dollar as the week unfolds. But right now, as we head into Sunday night's trade and when the European markets open up, we still are a little bit bearish, looking for a pressuring of support and down, targeting that $19.75 level. Once again, please check us out and sign up. Subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the book, High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback and Kindle versions. And also, should you want to just see what the book is like, you can go to any of our pages on forex-trading-unlocked.com. If you go to products, courses, and services, you look at the little tabs that come up. It says High Probable Japanese Candlestick Patterns. If you go to that page, it will give you the ability to check out the book and read a little bit of it first and see if you are interested in it. All right, with that being said, good luck in your trading week ahead. I think the Euro US dollar bears are going to be on the right side of the market. Looks like a sell rally forecast, at least in the short run. So good luck, and we will see you soon. Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here for a British Pound US Dollar Forex market analysis for February 1st through the 5th, 2021. We have our disclaimer pulled up here just to remind you that this webinar is for illustrative and educational purposes only. And also please remember to subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the book, High Probable Japanese Candlestick Patterns, which is available